Hello and welcome. Today, we're going to tackle a topic that sounds, really complicated: estate and gift taxes. But honestly, it's actually pretty straightforward for most people. By the time we're done here, you'll know exactly how this whole thing works. So let's just dive right in. So, this is the big question, isn't it? It's what's on everyone's mind. You hear scary terms like the death tax, and you immediately imagine the government swooping in to take a massive chunk of what you've worked so hard to leave for your family. But is that really what happens for most people? Let's find out. And here it is. This is the number that usually surprises everyone. For 2024, you can pass on over $13.6 million federally tax-free. Yeah, you heard that right, million. So what that means is that the so-called death tax just doesn't apply to the vast majority of Americans. But that's really only half the story, because the government also keeps an eye on large gifts you make while you're still around. So let's take a look at how that works. We'll start with a really powerful rule that lets you give generously, completely tax-free, year after year. Okay, so this is the absolute foundation of tax-free gifting. It's called the annual gift tax exclusion. The easiest way to think about it is like a yearly free pass. It lets you give a certain amount of money to literally anyone you want, and there's no tax paperwork, no consequences, nothing, for you or for them. So for 2024, the magic number is $18,000. You can give up to that amount to any single individual. And you want to know the best part? You don't even have to report it to the IRS. It is a completely clean, totally tax-free gift. Simple as that. And the real power of this rule is just how broad it is. You can give $18,000 to your son, and another 18 to your daughter, and another to your nephew. You can do this for as many people as you want. There's a great example in the source material about a guy named Cristiano who writes 10 separate $18,000 checks to 10 different relatives all in one day. And all of it completely tax-free. And on top of that, there are some payments that the tax law doesn't even consider gifts at all. So say you pay for your grandchild's college tuition or maybe a friend's medical bill. As long as you pay the school or the hospital directly, not the person, it doesn't count towards that $18,000 annual limit. The same goes for any gifts to your U.S. citizen spouse or to a charity. So the obvious question is, what happens if you give someone more than $18,000 in a single year? Do you suddenly owe a bunch of tax? Well, almost certainly not. And this is where those larger gifts connect right back to that huge lifetime exemption we talked about. It all comes from the same big tax-free bucket. Just think of it like this. The government tracks two things. 1, large gifts you make during your life, and 2, the value of your estate when you pass away. But it treats them like two sides of the very same coin. They are both linked by one single overarching tax-free amount. The official name for this is the Unified Credit. But honestly, it's just way easier to think of it as your lifetime tax-free bucket. That $13.61 million, that's the total amount you have in your bucket. You can dip into it for big gifts during your life, or you can save it all for your estate. It's your choice. This quote from the source material just sums it up perfectly. Let's say you give your daughter $118,000 for a down payment on a house. Okay, so the first $18,000 is totally free and clear because of the annual exclusion. The other $100,000, that just gets subtracted from your $13.61 million lifetime bucket. You don't pay a dime in tax. You just have to file a form to let the IRS know you used up a little piece of your lifetime credit. Now, if you're a married couple and you're both U.S. citizens, the rules get even better. The law has some incredibly powerful benefits that are exclusively for spouses. They make it so much easier to transfer wealth between each other. Yeah, when it comes to your spouse, the tax rules just get way more generous. Let's look at the two biggest benefits that you need to know about. All right, first up is something called the unlimited marital deduction. And it's exactly what it sounds like. You can give your U.S. citizen spouse any amount of money or property. I'm talking $1 million, $10 million, it doesn't matter. And it is completely 100% free of any gift or estate tax. Now, the key phrase here, and you got to remember this, is U.S. citizen spouse. This amazing benefit doesn't apply if the spouse receiving the assets is not a U.S. citizen. The second spousal superpower is called portability. You might see it called DSUE for short. What this does is it allows a surviving spouse to take whatever is left of their deceased spouse's $13.61 million exemption and just add it to their own. So a married couple can effectively combine their exemptions and pass on over $27 million completely tax-free. But And this is a really critical point. Portability is not automatic. You have to ask for it. To claim that unused exemption, the executor of the deceased spouse's estate must file an estate tax return, which is Form 706, and specifically make the election. And this is required even if the estate is way below the filing threshold and owes zero tax. It is a proactive step that you absolutely cannot afford to miss.
Okay, so let's put this all together and just quickly recap the most important things to remember, starting with the actual paperwork involved. Think of this slide as your practical cheat sheet. There are really only two forms to know. Form 709 is for gifts. You file that one anytime you give any single person more than that $18,000 annual limit. Then there's Form 706, which is for estates. That gets filed when an estate is large enough that it might owe tax, or, as we just learned, when a surviving spouse wants to elect portability. And really, this is the single most important takeaway from all of this. After everything we've talked about, the federal estate tax is something that less than 1% of Americans ever have to actually deal with. For the overwhelming majority of us, it is simply not a tax to worry about. So, now that the rules are a lot clearer, what's your next step? For most people, it's just the peace of mind that comes from knowing you're in the clear. For others, it might spark a conversation with a financial advisor. But either way, you are now equipped with the knowledge you need to decide. Thanks for tuning in.